When you look at the wild swings of the market, have you ever just wondered, is there some kind of hidden order to it all? A rhythm that most of us are completely missing? Well, today we're going to dive into a pretty fascinating, and yeah, I'll admit, a controversial idea, using the patterns in the cosmos to understand the patterns in the market. Let's see if there's really something to it.
So let's just kick things off with a quote that is pretty hard to ignore. It's from one of the most powerful bankers in history, J.P. Morgan. He's famously credited with saying, "Millionaires don't use astrology, billionaires do." And this wasn't just some throwaway line. Records from his personal library right there in New York actually confirm he had a really deep and long-lasting interest in this very topic.
And that right there is the million-dollar question, isn't it? What did a Wall Street giant like Morgan see in this ancient practice? Was he onto something that the rest of us have just completely overlooked? Let's dig into the core ideas and see what we can find out.
Okay, so to get started, we need a simple but really powerful way to think about this. The key to making this whole field even approachable is to stop thinking about cosmic mysteries and start thinking about simple mechanics.
I want you to imagine the universe as this giant, intricate clock. But instead of just an hour, minute, and second hand, it's got hundreds of hands. And each hand is a planet, just moving along at its own, very predictable speed. At its heart, financial astrology is simply the study of when these hands line up and then observing what tends to happen in the markets when they do. That's it. Now, it is absolutely crucial that we get something straight right off the bat. There's astronomy and there's astrology. Astronomy is the hard science. It's the physics of what these celestial objects are and where they are in space. Astrology, on the other hand, is all about studying the correlation between those predictable movements and our behavior down here. It's really about pattern recognition. And that brings us right to our focus today, financial astrology. We are not talking about your personality or your love life here. This is about looking for purely statistical links between the positions of that cosmic clock and how financial markets behave. You have to think of it less like fortune-telling and more like a tool for mapping out probabilities.
And this isn't some new age trend that just popped up with the internet. Not at all. In fact, its modern use in finance has roots that go back about 100 years, and it was shaped by some really interesting people.
Back in the Roaring '20s, a woman named Evangeline Adams became a huge superstar, and she famously advised J.P. Morgan and other Wall Street bigwigs. Then, a couple of decades later, a guy named Donald Bradley came along and took a much more systematic approach, creating a forecasting tool that, believe it or not, people still reference today. And what's really fascinating is how people like Bradley built these models. This was long before there were any fancy algorithms or supercomputers. He did it by hand, painstakingly observing and cataloging how the markets behaved during certain celestial alignments over years and years and years. This was pure, old-fashioned historical pattern recognition. So, how does this actually work in theory? How could planets that are millions of miles away have any kind of influence at all? Well, the core idea can actually be explained with a concept we all learned back in high school physics. Remember Newton's second law? It basically says if you have a bunch of different forces all pulling on an object, the final direction it moves is the net result of all those forces combined. It's not about one single pull, right? It's the sum of all the parts. Well, financial astrology applies that exact same logic to the markets. At any given moment, you might have some planetary alignments that historically correlate with positive, upbeat energy, while others correlate with negative, tense energy. What we see in the market's price action is just the outcome of this cosmic tug-of-war. It's the net effect of all these different pulls.
And the basic way it's all classified is actually pretty simple. For thousands of years, observers have categorized the angles between planets. They're called aspects, as either harmonious and supportive, which we'll call positive, or tense and challenging, which we'll call negative. The working theory is pretty straightforward. Positive aspects tend to line up with rising markets, and negative aspects tend to line up with falling markets.
Okay, I get it. This all sounds interesting, maybe a little out there. But how can we possibly prove any of it? How do we get from a cool theory to actual testable data? Well, this is where financial astrology has a really unique advantage.
And here is the absolute key. Trying to prove a planet made you feel a certain way is subjective. It's almost impossible to test. But testing whether the S&P 500 historically goes up or down during a specific planetary alignment, that is completely different. Market data is just numbers, it's objective, it's quantifiable, and it's perfect for statistical analysis.
Now look, the goal here is not to find some magic crystal ball that's 100% accurate. The real goal is to find a statistical edge. If a model that's based on these cycles is correct, say 55 to 70% of the time over a huge sample size, you have just tilted the 50-50 odds of the market in your favor. And to put that in perspective, a lot of big quantitative trading firms fight for a statistical edge of just a fraction of a percent. So an edge in this range is, well, it's significant.
Okay, so let's make this practical. How can you, as a total beginner, start to observe these patterns for yourself without getting totally overwhelmed? Well, the best place to start is with the most obvious cycle in the sky, the moon. Let's see how you can get started.
Seriously? It starts this simply. The lunar cycle is the easiest one to track, and you don't need any special software. Just get a calendar that shows the moon phases. Then, just start paying attention. Ask yourself, what happens to market volatility or direction in the days leading up to and just after a new moon or a full moon? Don't even look for a specific answer at first. Just be a curious observer and write down what you see.
And here's a super simple template you could use. Just a few columns is all you need. The date, the lunar phase, what the market actually did, and then your own notes. This is so important because, over time, this journal becomes your own personal database. You're no longer just relying on someone else's theory. You're building your own, based on what you personally observe. And eventually, you can build this into a simple daily checklist. Now, this isn't meant to replace your current trading strategy, not at all. It's just to add another layer of context. Think of it like checking the weather before you leave the house. Does the cosmic weather today support a bullish move you are already thinking about? Or does it maybe suggest that it's a good day to be a little more cautious? It's just one more piece of data to consider before you act.
So we end with this thought. Financial astrology isn't really about a predetermined fate that's just written in the stars. It suggests something way more practical, that the universe is a giant clock. And by learning to read its cycles, we might not be seeing the future, but we might be looking at a map of probabilities, a map that could just give us a potential edge in understanding the hidden rhythms of the market.